Good afternoon, everybody, and welcome to the annual general meeting of the company. My name is Fiona Woolaker, and I'm the chairman of the meeting today. Firstly, I'd like to introduce my board colleagues. Thomas Chambers, who you should be able to see, who joins me here at Albion Capital's offices in London, which is the official place of the AGM as notified to shareholders in the notice of meeting. Our fellow director, Martin Fines, has also joined as a panellist today, and you should be able to see him on the screen. And last but not least, we have Robin Field, and we're delighted that he's able to join us here on the screen as a panellist for his last AGM as chairman of the company. As noted in the annual report, today's AGM does in fact mark Robin's 12th year as chairman of the company, which draws to a close today at the end of the meeting. He's not put himself for re-election and therefore will be stepping down from the board following the conclusion of this meeting. The board have resolved that I will succeed Robin as chairman of the company. I've had pleasure in working with Robin alongside Robin since I joined the board in May 2019. His devotion and diligence to the role of being chairman has been evident throughout his tenure. Ultimately, he's always been looking to ensure that shareholders' interests are at the forefront of all board's decisions. It's a great pity that the pandemic has not allowed us to have our usual format of the AGM, as I know Robin would have much preferred to meet all the shareholders in person to say goodbye himself. However, knowing Robin as we do, I know that he'll be attending future AGMs as a very active shareholder, and I'm sure you will all wish us to join the board in wishing Robin the very best for the future. Also joining us later in the meeting will be Robert Whitby-Smith, who is partner of Albion Capital and the manager of the King's Arms Yards funds. As with last year, because of the pandemic, the AGM is being live streamed over the internet to give shareholders the opportunity to take some part in the proceedings. Given the current government guidelines and measures in relation to social distancing and public gatherings, this meeting will be convened with the minimum necessary attendees, 2 directors who are both shareholders and a representative of Albion Capital as company secretary. The quorum for this AGM is 2 members entitled to vote in person or by proxy. This has been met, and so I declare the meeting formally open. Separately, you will note from Resolution 12 that the board is proposing to change the Articles of Association to allow for virtual and hybrid meetings to be held in the future if necessary. This will allow continued shareholder engagement. Interestingly, it appears that many more shareholders are actually participating in live streamed events than has historically been the case for physical meetings, particularly at Albion. And I'm pleased to say we have at least 100 people registered for the AGM already today. I'm also pleased to say that I'll be taking live questions shortly. But ahead of that section of the meeting, please may I ask that you use the hop-in chat function to send questions through to me as the meeting progresses. To do this, go to the right-hand side of your screen, click the Slido button, and you'll be able to type in your question there. I would also like to take the opportunity to thank shareholders who have already sent their questions and queries through to the chairman email. We will be answering a selection of these questions shortly, but notwithstanding this, the board is particularly pleased that we're able to continue engaging with shareholders during these unprecedented times. And I hope at the end of the AGM, you will give us any feedback you may have to the same email address that you've already used for questions, which is kchairman@albion.capital. Now, on to the business of the AGM. And first of all, we'll start with the interesting part, which is a presentation from Robert Whitby-Smith, who is the partner of Albion Capital, responsible for the King's Arms Yards funds. Over to you, Robert.
Thank you, Fiona. So welcome everyone. Delighted so many are able to join virtually. And my purpose today is to provide an update of the highlights of 2020 and a brief view on the outlook for 2021. So if I could go to the next slide, please. And the next slide. So as you can see from this slide, delivered a reasonable total shareholder return in what was a a very unusual year of 4.2%, and they continue to pay out the tax-free dividends in line with policy of 5% of NAV. If we go to the next slide. The pandemic was clearly had the biggest impact on 2020 and caused significant disruption to everyone's lives, and caused a significant impact to our business, particularly in Q2. And during Q2, we spent much of our time working with our portfolio companies to better understand and plan ahead, but also it disrupted our new investment activities. And you'll see later in the presentation, new investments were approximately a quarter down in 2020, and that was primarily due to the impact of the pandemic. The pandemic also impacted some portfolio companies. So, for example, we have care homes in the portfolio, exposure to the rail sector, gyms, and other businesses where the end markets were affected significantly. But the key, I think, for us is that our funds and our focus has been for some time on enterprise software and healthcare, and those two sectors have proved have displayed resilient growth over 2020. So that's a real positive impact, and then also it's had a positive impact on our connection with our shareholders. We've been delighted with the increase in participation from shareholders in virtual meetings and AGMs like this one, and also in our fundraising process, which was one of the most efficient ever. So there are benefits. There have been some benefits to our business and the fund. If you go to the next slide, please. This summarizes our track record over the longer term and puts it in context. As you can see, our 5-year return was 36%, and our 10-year return nearly 93%. So you can see total return is comfortably covering the 5% per annum dividend target that the fund has. I wouldn't look too carefully at the March 2021 performance, particularly the 12-month performance, because that's comparing conservative view in March 20 with the reality as it is in March 21. So if you go to the next slide, please. In terms of fund highlights, the overall funds raised, King's Arms Yard raised 14.6 million in the year of a total of 58.5 million raised by the Albion VCTs. You can see exits were muted in the year. There were some exits, which we will touch on later. Our investment rate, as I mentioned earlier, was a bit down on previous year, particularly due to that disruption in second quarter, but then picked up again thereafter and has continued in 2021. And then buybacks and dividends are in line with expectations and policy. If I could move on to the next slide, please. These are the key changes in valuation during the year. And so I'll explain some of the drivers behind that to give some color. So Pravica is in the healthcare space and grew very strongly in 2020, which has driven the uplift in value. OnPrompt received an offer from a strategic acquirer, and that company has since been sold, but the offer had been received in 2020, hence the uplift. Quantexa raised further money at a significant uplift, reflecting the very strong growth in this business. And then, sadly, as always, in a diversified technology and healthcare portfolio, there are some write-downs, trading difficult or less growth than hoped. Perpetuum is one I'd probably like to highlight. That's they serve their end market is the rail sector, and obviously that suffered significant impact from the pandemic. Fortunately, the Hitachi appreciated the strategic value that Perpetuum had built and has since acquired the company. But obviously, that was a disappointing impact from the pandemic. If I move on to the next slide, please. Here you can see the diversification of your portfolio by both number of companies. There are 66 companies in the portfolio, but also by sector. And you can see the key themes are software and healthcare going forward. We'll touch a bit further on our investment theses later. If I go to the next slide, please. And here you see some analysis of the portfolio by stage of investment. And I think it's a key point that some shareholders are less aware of is this isn't a startup portfolio. This is a combination of early stage and scale up. And you can see the number of companies in the portfolio with more than 1 million revenue, more than 5 million revenue is significant. And you can also see it by number of employees. So you can get a sense of the size of company and the scale of company that we're backing. If you go on to the next slide, please. As one would expect in a technology and healthcare portfolio, some companies will grow faster than others. And these are the top 3 holdings of the fund. As you can see, a small note at the top there, after the sale of the care homes, which happened in March 2021. And these 3 largest companies are performing extremely well. You can see the valuations have moved from a cost of nearly 5 million to a book value in our books of nearly 18 million. And the key driver of that is the very strong growth since we invested. So you can see pre-revenue to over 10 million for Probica, 10x growth, over 10x growth at Egress, and over 20x growth in revenue at Quantexa. And these 3 investments now account for, as you see down the bottom, 22% of the net asset value as at December 2020. So they are a significant feature of the portfolio, and they have the potential to contribute significant further value in the future. If you could move on to the next slide, please, Victoria. So provide some color on new investments made during the year. Seldon is a company that helps enterprises deploy their machine learning models. As you can see, the investment is to increase the size of the team substantially in both data science, engineering, and also go-to-market. And as the enterprises have got vast amounts of data, they're now increasing the amount of analytics and machine learning models they're building to interpret and provide insight from that data. And Seldon is a company that helps them turn those models into production, into reality. If you could move on to the next slide. So WeGift is another very interesting company. They allow enterprises to provide digital rewards and incentives. So the gift card market globally is over $600 billion. And half of that approximately is enterprises, either incentivizing their customers or their employees, as it mentions here. And currently the market is globally about 25% digital. And so you can see there's a massive market opportunity for WeGift, which has now connected over 700 brands and retailers to enable this to happen. If you go on to the next slide, please. And then just brief color on 4 other new investments. Credit Kudos is taking open banking data and using that to become the next generation credit rating agency. And they've got regulatory approval to be a CRA, unlike, I believe, any other tech company. So really exciting to take on the experience using real-time open banking data, which obviously involves customer consent. Consiris is transforming the specialist insurance market. So it's providing data analytics, giving underwriters, brokers, and asset holders better information so they can better price risk. Transfic is connecting between the banks and the trading venues, particularly in fixed income. So trading venues being Bloomberg, etc. And we've co-invested there with a syndicate of banks, including Citigroup, HSBC, ING, Commerzbank, and others. UMed is a digital health business which helps find recruits for clinical trials, using big data and data analytics. If you go on to the next slide, please. I think important to touch on some of the follow-on investments, and follow-ons will become an increasing part of the portfolio over time, because we want to back the winners as they scale. Quantexa their first use case is using data analytics to detect financial crime and help with money laundering. And as touched on earlier, they're growing extremely quickly and raised a significant amount of money recently. Black Swan is, again, data analytics business, but this time predicting consumer trends for CPG companies. So, for example, what products will be attracted to consumers in the future based on current social media and other information and data available. Phrasee is a company that is helping enterprises better express their marketing messages using, again, data analytics and LLP, machine learning, to optimize their marketing campaigns. So you can see a big theme is data analytics alongside digital health. If you move on to the next slide, please. And if I touch briefly on some of the exits, G Networks was a strong exit. As you can see here, once all proceeds have been received, it will deliver 3.8 times cost for our funds. And they successfully rolled out high-speed fiber optic fiber, to 160,000 premises during the period of our investment, which is really exciting. And they've gone on to raise a significant amount of capital from USS and Cube Infrastructure managers. If you go on to the next slide, please. Another exit, another strong exit, as you can see there's over 70% IRR, was a company called ClearView, which was providing software for enterprises in HR for performance management. It was an exit sooner than we expected. So we only held, the investment was only held for 15 months, but it attracted interest from a strategic acquirer within a short time frame of our investment, and it was the management team felt it was the right time to move, to expand the business within the corporate setting. If we can move to the next slide, please. And then post year end, very significant investments exited, and the top three are the care homes in the portfolio. So King's Homes Art has now sold all its care homes. The total investment in those three care homes over time had been 8 million, and the realisation is resulted in a 20% IRR, including interest received to the funds. So you can see post year end, the fund has received 14.7 million of cash. So a fantastic return in that sector. Delighted with those returns. Move to the next slide, please. We've also sold in March 2021 our investment made in OnPrompt. As you can see there, a good IRR of 17% and cash on cash of over 2 times cost. OnPrompt was in the automation space, so helping companies move from manual to digital, which is a big theme, which I'll touch on briefly later. Acquired by a strategic acquirer called Elemica. If we move on to the next slide, please. So our investment strategy for the VCTs is to identify and back long-term trends, and we're a thematic investor. So we identify where we feel the best opportunities are by sector, and we focus particularly on enterprise software, B2B software, in 4 subsectors. As you can see here, cybersecurity, digital data analytics, fintech, and we also focus on digital health and healthcare technologies. And we will always be opportunistic for amazing teams and amazing opportunities, but we are focused within those themes. And what those backing long-term structural changes has meant is that we have got a low exposure to consumer-facing businesses in B2C, which has benefited this fund. Can you move to the next slide, please? ESG, we have always had a long-standing belief that it's important to do the right thing, and everything involved with ESG is within our DNA. 3 years ago, we signed up to the UN PRI, and we've been over time steadily embedding those or deepening ESG within and formalizing our ESG within our investment process. How we we appraise, how we choose companies, how we appraise them, how we monitor them, and what we hope them to achieve at exit. It's an incredibly important area for investors. Move on to the next slide, please. And I've touched on, if you move on to the next slide. And so the purpose of this slide is to plug to investors, to any listeners, encourage any listeners who have not signed up for electronic communications. Please, can you do so? Not just is it kinder on the environment, but Albion will donate to charity for every shareholder who makes that move. And you can see here, in quarter one, Albion has raised £5,000 from a combination of those shareholders moving to electronic communications, as well as an internal project to raise money. If you can move to the next slide, please. The prospects, because we're focusing on long-term growth trends, which we believe we are at the early stages of the migration from legacy on-premise clunky technology to cloud-based technology. We're at the start of the wave of the move from manual processes to digital, and then that digitization enables a whole level of innovation and new business models, and as we've all seen, and we believe we're at the start of those waves. Healthcare, incredibly important big market, and digital health, the adoption of technology within the healthcare sector has been speeded up tremendously by the pandemic, where both providers and patients have seen the benefits and the impact on outcomes of digital health, and having a hybrid model, combining face-to-face with digital health. So we see these are strong long-term trends where we're at the early start of the wave. If you can move on to the next slide, please, Victoria. So it's important to note that the ongoing economic impact from the pandemic, including the government responses and the quantitative easing, it's unknown. But what you have in this portfolio is a diversified portfolio balanced across sectors and risk. And the number of companies, as touched on earlier, are thriving despite the conditions of the pandemic, and indeed, perhaps being boosted by the conditions of the pandemic, particularly those in digital health, and companies generally have accelerated their digital adoption, as indeed we all have. And we're really excited about the pipeline. This is attracting amazing entrepreneurs to build amazing businesses. So super excited to be investing in these sectors at this time. If you can move on to the next slide, please. And thank you. I think there's probably a fraud warning that we all need to be conscious of, but back to you, Fiona.
Great. Thanks, Robert, for that very full presentation. We're all excited about the wave of technology too. Moving on, as indicated earlier, we have in fact received some questions from shareholders as we've been on air via the hop-in function, and we also had some in advance of the AGM to the chairman's email address, as I mentioned earlier. So we're now going to try and answer as many questions as time permits, but please do be assured that all the relevant questions and their corresponding answers will in fact be posted on the Albion Capital website as soon as possible after the meeting. I'm going to kick off first of all with a couple of questions that specifically for Will, and then we'll come back to Robert, give him a breather for a moment, and we'll come back to him in a minute. So Will, we've had a good question in here, which I'd like you to have a go at. A number of VCTs have opted for IPOs instead of trade sales for some of their portfolio companies, including Virgin Wines, for example, and Music Magpie. Do you envisage that this trend will continue, and which Albion portfolio companies would be suitable candidates for IPOs in your opinion?
Fiona, thank you. It's been a really interesting trend that we've seen, the number of our fellow VC managers producing some really great returns through the IPO. And when you look at the companies just mentioned there, and by that Virgin Wines, Parsley Box, and Music Magpie, they are consumer-facing businesses. And what we're seeing is a trend of the IPO marketing opening up for that type of business. The fourth one, Aracor, is actually one that was in our portfolio, which is the life sciences. And again, it's great to see a development of the London IPO market, which had been somewhat slow, but appears to have really woken up. And we've got to remember what an IPO is. It's an opportunity for a company to raise further money to grow. It's a part of a toolbox. Our portfolio is predominantly B2B software. What we tend to raise further funds through the private market, so raising from other growth investors, because that funding is available. It allows us to grow the businesses. And were we to IPO a business, I suspect it would be when we've significantly grown businesses to a very large scale, meanwhile tapping other sources of funding. So great that it's there. Don't envisage any immediate further IPOs within our portfolio, but it definitely remains something we can look at as our B2B businesses grow.
That's great. Thanks, Will, for that. Actually, I've got another couple for you, Will, whilst you're in the frame here. A couple of questions on G Networks, to which Robert obviously had a slide. Just a little bit more detail about to whom the investment was sold, and more importantly, why the proceeds will not be received for another 3 years.
Absolutely. Thank you, Fiona. The G Network was a really strong return. We sold in December. It was a 3.8 times multiple, and that was on effectively an investment was across both loans, stock, and equity. So that was a strong blended return. The terms of the deal were those that were available. They were strongly negotiated by us. We believe they delivered a good return. Part of that is that the consideration won't be received for 3 years. The board and the manager took legal advice to ensure that we structured the sale consideration appropriately to ensure the maximum chances of recoverability. And I think in that respect, it's really important to think about who our counterparties are here. One of them is USS, which is the very large universities pension fund. And the other one is Cube Infrastructure, which is a large European infrastructure fund. So we believe it's a good return, it's appropriately structured, and we look forward to receiving our proceeds in due course.
Great, thanks for that. In fact, on the subject of returns, we have a question for Will again. What is your definition of a good IRR? Would you regard 17% as a good return?
When we look at returns, we look at it in two ways. An IRR, by definition, looks at how much money is received over a specific time frame. So if you sell an investment for a loss very quickly, you have a very high IRR. When we go into investments, we tend to look at it, what is the potential multiple we will receive? So you'll see much more, we talk about money on money returns. And that's because you don't know when you go in what the time frame of the investment will be. But we want to target strong multiples, given that we are investing in very high growth businesses. So we would typically be looking for a 5 to 10 times return. So that's how I would define a good return. In terms of an IRR of 17%, that is a factor of time. It's a good return if you think that our target dividend yield is 5%. So a compounding return of that is a very good gross return on an investment.
Okay, that's great. Thanks, Will, for that. Now, in a slightly different area, I have a question aimed at, Martin Fines would be the most appropriate to answer this. A couple of questions together, Martin. In view of the longevity of some of the directors and the potential impact or perceived impact on our independence, would you like to update shareholders on our company's succession planning? And that also segues into the other question, which is also about our Resolution 12, which we're hoping to vote on today in order to provide the board with more capacity for succession planning. Shareholders are aware that we are proposing to increase the cap on directors' remuneration from 100 to 125,000. And if you could expand on that as well, Martin, that would be helpful.
Thanks, Fiona. Yes, it's very much the intention of the board to continue to address the ongoing succession in a timely fashion. You will have seen in the recent financial statements under board continuity, and at this year's AGM, that marks the 12th anniversary for Robin Field being with the company, and he's going to be stepping down at the end of this meeting. And as you heard earlier, Fiona Woolacombe has agreed to take the chair. In addition, we've announced today in the interim management statement for the company the intention for me to retire as a director at the AGM in 2022, and for Thomas Chambers to retire as a director at the AGM in 2023. The nomination committee has already started a recruitment process to identify candidates, and announcements around new director appointments will be made in due course. Going on to the remuneration issue that you mentioned, this is the change from 100,000 to 125,000, which we're proposing for an increase in the annual cap on directors' remuneration. It's not our intention to increase directors' fees materially in the near term, but the new level proposed under the articles does give us extra flexibility in the case, for example, where we have an additional board member being appointed prior to the retirement of an existing director. So, for example, if we had 4 directors at one point, and then we wanted to recruit a 5th, that gives us the headroom to do so.
Great, thank you, Martin, for that. And that addresses the Resolution 8 questions as well, which will be raised later. We've got another question. Actually, this one's probably best for aim this one at Robert. Given all the excitement in tech in general, every day you open the newspapers and there's more incredible valuations and excitement out there. How long can it last? Is this the new world we're moving into, or should we be scared?
Yes, a difficult question. And I won't make a prediction of what's going to happen in the public markets or quoted technology companies, or indeed refer to any. But I think what we're investing at a very different stage from the public markets. We're investing at an early stage, and there it's I won't say it's all about, but it's nearly all about seeing the best opportunities, picking the winners, and helping those companies scale. And whether you pay X or 1.2x valuation for a business is far less relevant than how much that company is worth at exit. And of course, one has to remain disciplined, and that's why there's a tough investment committee process. But we see the sectors we're investing in, healthcare and enterprise, are at the very early stages of digitization and adoption of digital. So legacy on-premise, as I touched on, legacy on-premise systems, I'll mention a few large companies who hopefully won't be upset with me, IBM and Oracle moving towards cloud, manual processes moving towards digital. You'll hear a lot about more automation, penetrating more enterprise, software eating the world, and then all the business models and innovation that enables. So, for example, once you've got GPS data and everyone's got a mobile phone, suddenly you can have an Uber, whether you like Uber or not. But it's enabled by the data analytics, the adoption of mobile phone, the cheap cloud infrastructure, the ability to build technology very swiftly, and it's attracting the best entrepreneurs. So I would say we're at the early stages of a complete transformation of the economy.
That's great. And actually, I'm going to come back again to you, Robert, actually, with another question here. It's just a very straightforward question. Somebody's asking, Robert, what was the actual return on the sale of Perpetuum?
Now, unfortunately, I don't have a precise number in front of me, but it's approximately 50% of cost. Sadly, the impact on the sector and the outlook for the rail sector. I mean, the fact that Hitachi bought it validated, I guess, our thesis around product and market opportunity, but it became, the rail sector was in a very difficult situation.
As it does. And Will, I've got one final one for you here on. It's actually an interesting subject, because you mentioned, Robert mentioned one in his presentation, on early exits. Often, obviously, they are quite lucrative, but how do we find and hang on to the longer burning prospects?
Thank you, Fiona. And you do point, this question does point to a very central part of our investment thesis, that to make good long-term returns, we need to be able to back those businesses and, let's say, call it backing our winners. It's letting them grow very significantly before we sell, and that it continues to be absolutely our objective. Having said that, there will be instances, and clear review is one, where a set of circumstances arises and opportunity arises where we will sell earlier. But that's not to say that that is our ambition, because it's through backing them over a long period of time that you maximise return. Your point about the point of the question about research is an important one. Albion has worked to increase the resources available to it. We now have 17 investment executives focused on technology within the Albion Group. So we are very substantially resourced to ensure that we are able to replace investments when they're realised with new and exciting investments. And I think Robert's done a very good job of painting a picture of just some of the very exciting things that we've been doing and the investments that we've been able to make, even during the pandemic of 2020.
That's great, Will. Thanks for that. I've just got one final one for Will, which actually follows on to that, being very well resourced at the moment. Following the recent realisations, obviously we've sold the care homes and we had a recent fundraising, and therefore the company's got a large amount of cash, obviously for investments and potentially a special dividends. What's the view on that?
So this will ultimately be a decision that will be made by the board, and we will be helping to recommend that. So the timing on that is that we're clearly investing steadily into a very good pipeline of investments. And what has been announced in the year-end results is that at the time of the half-yearly results, when they are published, and that's September, the board by then will have had an opportunity to have reviewed the cash situation as it is, consider the likely needs of the fund in terms of new investments and follow-ons in the portfolio. And at that stage, a decision will be made about an appropriate return of cash to shareholders through a special dividend, given those significant exits that you referred to.
Thank you. Before we move on to the main meat of the formal business of the AGM, we do actually have one last question, which is actually on the format of the AGMs going forward, which actually I'd quite like to answer, because it follows on as well from some of the themes that Robert's been speaking about in his presentation. And I personally am very, very excited by the idea of engaging with many more shareholders than we've ever been able to. They're always difficult balance to get right. Of course, we want to engage with our shareholders face to face, and we will continue to do that. But this pandemic has actually provided us an opportunity to bring things perhaps a little bit further forward. Perhaps in 5 years' time, we'd have been doing this anyway, but we're now doing it. And we're trying really hard, and I take my hat off to Albion for huge amounts of research into this area as to how to really engage with our shareholders as well as we can. And as I mentioned earlier, we really appreciate feedback from shareholders as to how you feel about this particular format and how you would feel about things going forward. But certainly having over 100 registered, it's a very exciting prospect going forward. It probably will end up being a hybrid system. We certainly haven't taken any formal decisions as a board. There's lots and lots of new products out there that are people desperate to get companies to test these platforms, and the prices are coming down, and our ability to reach out is really exciting. So no formal decisions yet, but certainly appreciate any comments from shareholders. So thank you for all those questions, a nice variety there. And I'll now proceed to the formal business of the AGM. The notice convening the meeting has been in your hands for the statutory period, so I will now take the notice as read. There have been no questions from shareholders on the AGM resolutions apart from to deal with Resolution 8, which Martin has already addressed. So I will therefore now proceed. Thomas and I are the two shareholders present for the AGM, and as such, we're permitted to vote. Shareholders will not be able to vote, as they are not at the place of this meeting. However, you will shortly see that the proxy votes we've received show that the majority of shareholders have voted in favour of the board's proposed resolutions. I do not intend to read out the proxy votes after every resolution, but I will show them on the screen as each resolution comes up. The first resolution on the agenda is to receive and adopt the company's accounts for the year ended 31st of December 2020, together with the strategic report and the reports of the directors and auditor. Those in favour? Thank you. I declare the resolution carried. Resolution 2 is to approve the directors' remuneration report for the year ended 31st of December 2020. Those in favour? Thank you. I declare the resolution carried. Resolution 3 is the re-election of Thomas Chambers as a director of the company, and I have pleasure in proposing Thomas for re-election. Those in favour? Thank you. I declare the resolution carried. Resolution 4 is the re-election of Martin Vines as a director of the company, and I have pleasure in proposing Martin for re-election. Those in favour? Thank you. I declare the resolution carried. For the next resolution, I will pass the chair of the meeting over to Thomas.
Thank you, Fiona. Resolution 5 is the re-election of Fiona Woolacombe as a director of the company, and I have pleasure in proposing Fiona for re-election. Those in favour? Thank you. I declare the resolution carried, and then back to you, Fiona.
Thank you, Thomas. On to Resolution 6, which is the reappointment of BDO LLP as auditor of the company to hold office from the conclusion of the meeting to the conclusion of the next meeting at which the accounts are to be laid. Those in favour? Thank you. I declare the resolution carried. Resolution 7 is to authorise the directors to agree the auditor's remuneration. Those in favour? Thank you. I declare the resolution carried. Apologies. Resolution 8 is to increase the ordinary remuneration cap from £100,000 a year to £125,000 as in the Articles of Association. Those in favour? Thank you. I declare the resolution carried. Resolution 9 is to allow the directors to allot shares. Those in favour? Thank you. I declare the resolution carried. Resolution 10 is a special resolution that allows the directors to be empowered to disapply preemption rights. Those in favour? I declare the resolution carried. The penultimate resolution, which again is being proposed as a special resolution, is to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. Those in favour? Thank you. I declare the resolution carried. The final resolution, which I mentioned earlier and is again being proposed as a special resolution, is to amend the company's Articles of Association to enable it to hold general meetings, either wholly or partly by electronic means. Those in favour? Thank you. I declare the resolution carried. Thank you to all those attending, and that concludes the formal business of the AGM. I would like to thank all shareholders who joined this live streaming of the AGM, and as noted earlier several times, the board really does welcome any feedback you may have, which you can do by sending an email to kchair@albion.capital. And for those of you who are interested in seeing the list of questions and their corresponding answers, these will be available shortly on the Albion Capital website. Additionally, I do hope you were able to watch the entire presentation without any connection issues. However, if you would like to watch a recording of the event, a link to the video will also be available on the Albion Capital website. That concludes the business of the AGM, and I'd like to thank you all again for joining, and I will now formally close the meeting, and on behalf of the board, I do hope you will stay safe and well. Thank you.